Unless you're basically going along and speaking to the bank directly or spending some time talking with your mortgage advisor, which of course is a good idea, you're really not going to know all that much about how the banks are changing the rules and that sort of thing. And there have been some interesting rule changes most recently. Well, hello again, everybody. Us economists, we've always got theories about things that are going to happen and different interpretations of what happened in the past and why. And with the 5 surveys that I've had up and running, in some cases for about 2.5 years now, I can actually get some insight to either back up some of the theories I'm putting forward there or to challenge them, in which case maybe I need to backtrack and alter the view. Now, one of the views I've been getting across here recently has been about interest rates reaching their peaks, a couple of months ago, back in June, not stopping the Reserve Bank from still raising the official cash rate. But, those fixed mortgage rates, we're probably generally going to look at easing from here on out, but nothing necessarily too rapid. But interest rate levels are only one of the major concerns which buyers currently have at the moment. In fact, it is the top concern, with 82% of real estate agents in the survey which I do with REINZ saying that is the top concern which people have. I also have 78% of the real estate agents saying that people are very concerned about access to finance. And this is where the surveys I've got start to become particularly valuable, because in a couple of them at least, I ask the respondents what it is they're seeing out there with regard to bank willingness to lend. Because if you think to yourself, unless you're basically going along and speaking to the bank directly or spending some time talking with your mortgage advisor, which of course is a good idea, you're really not going to know all that much about how the banks are changing the rules and that sort of thing. And there have been some interesting rule changes most recently, especially when it comes to investors. One of the major banks has just eased up a tad on some of those rules there. But, overall credit availability is still definitely tighter than it was 12, 24, 36, 48 months ago, but it is improving. And so if we go to one of these surveys, it's one I do with Crocker's Property Management of people who already have residential investment properties. And I asked them specifically about whether or to what degree they are finding their banks tough to deal with. And if we go back to the peak for the credit crunch in New Zealand, which is sort of the December, January into February period, we had about 70% of the respondents back then saying, yep, the banks are pretty tough. Or sorry, I'll correct that, about 60% of the respondents. Then if we go to June, it was 35% saying, or they're being tough. In July, it was 30% saying things are tough. And now for August, we've got 24% saying it's tough. So they're still saying it is tough, but not to the degree of earlier this year, and things are improving on a monthly basis at the moment. And the mortgage advisors, again, if we go back to the worst period for the credit crunch at the turn of the year, we had around then about 70% of them saying it is becoming more difficult to get finance out there. And if we then look at June, we had the likes of 17% still saying it seems to be getting tighter out there. And then in July, I had a net 9% saying actually it's getting better. And my most recent result, about to be released, is a net 25% of mortgage advisors generally saying things are getting better out there for credit access. Again, I'll just emphasize, compared with a year ago, credit availability is worse, but the change is towards some improvement now. The banks have got to better grips with the LVR rules, with the triple CFA rules, etc. And so that is something which is going to be, starting to soften the extent of house price falls over the next few months. And as I've said before, I think will provide scope for some mild increases over 2023. And I just wonder if many of the first home buyers out there may be starting to think that way as well, because I also ask the mortgage advisors, are they seeing more or fewer first home buyers? Again, horrible back at the turn of the year. June, I had a net 12% saying, fewer first home buyers coming forward. July, I had a net 7%, fewer first home buyers. My most recent survey of the mortgage advisors now, a net 8% are saying they're seeing more first home buyers. So there is some evidence now of first home buyers starting to step back into the housing market. We'll see how that goes. Lots of water to go under the bridge, but things are starting to move in the direction of us approaching a bottom for the housing cycle. Not yet. It's still a few months away though. And like I say, mainly of relevance for 2023. All the best out there.